So you put the trade on and it goes your way. It goes 10, 15, 20 pips, and then bam, it reverses, goes straight to your stop, take you out, and then drop again or go back again, straight into the direction where you're expecting it to go. And you're like, damn, these damn big bankers or these damn brokers, they're all hunting my stops. And there are many, many gurus who have told you that's exactly what happened, right? Now, don't tell me not you, no, not me. That has never happened to me. I've never said that. I'm pretty sure you've said that like a million times in your trading career, especially if you're losing. That's exactly what you would say. Good afternoon, traders. Wonderful afternoon here in Dubai. My name is Anil Mangal. Go check my YouTube videos out. Check the analysis we do, and you will understand why stop hunting is BS. It's not true. In the next couple of minutes, I'm going to show you that. I'm going to prove it to you. Let's start. So I'm going to show you the silver, right? We're in silver. This is silver. This is called forecasting that we have in the silver. The method we use is called wave analysis. Now, let's take any part of this chart, just any part of it. And let's assume you decide, hey, I'm going to sell here. I could see this is dropping. Whatever the method you're using, your support or resistance, it doesn't matter. That's irrelevant. That is irrelevant at the moment. But let's say you sell it here, right? For whatever reason, sell. It goes a couple pip your way. And then it starts to go back and you have a stop here and it goes to your stop and take you out and then drop. Your thought process is, and you are told by many of the gurus out there, is that when you put the trade on, you put a stop, they'll go hunt your stop. Here's the question. And you should ask all the gurus who tell you this, the simple question. Who is hunting my stop? Literally, who is hunting your stop? When they said they, the big banks or the brokers, just ask them exactly who is it. Now, if you're a retail trader and you don't know this, you have to stop trading immediately. You are actually not buying or selling anything. You're not buying or selling anything if you're trading with a broker. Unless you're participating in the market itself, which means you are buying directly from the market, then maybe you'll be buying something. But if you're trading with a broker, CFDs, you're not buying or selling any currency. You're not buying or selling any metals or any stocks or anything. All you're doing is speculating on the price. Your broker is not buying or selling anything. Your broker is only holding the trades that you put and hope that you lose it. Literally, he's hoping that you're going to lose that trade because you have no understanding of how the market moves. The method we use is called wave analysis. You see that curve I put at the top there? See all these charts that I have prepared? It's showing you the waves of what the market will do. The market moves in waves, and follow me as I go. It goes up, it comes down. It goes up, it comes down. It goes up, it comes down deeper. It goes up. See, it comes back deeper into this to make this. So if you had a stop here, you're gone, and then you'll watch it go up, and then it's going to do the same thing here, up and down all the time. You notice these one, they drop, go back up, drop, go back up, drop, go back up, drop, and now it will drop. And it will do the same thing on the way down. It's going to go back up, drop, go back up, drop, go back up, drop, come all the way to this level. And with a high probability, it will even go back to the top. There's a 20% chance we will break this low. I think right now you're thinking, what the hell are you talking about? How do you know it's going to do that? This is what we call wave analysis. And these are all forecasts that are done, not hindsight, but before they happen. And if you understand how it works, you will know that there is nothing like stop hunting in the market because you're not making a trade. You're literally telling your broker, I believe that this instrument, whatever it is, whether it's a euro dollar, yen against the pound against the Aussie, whatever it is you're trading, is that the price difference. It's called a contract for difference. That I think this will go up, this chart will go up, or it will go down. If you believe it's going to go up, you buy it. If you believe it's going to go down, you sell it. And then after a period of time, when you panic and you close it, or when it hits your stop loss and close, the difference is shared. The difference of the loss or the win is given to you or taken away from you. That's all. There is no trade being ever made. Your broker is not making, no matter what he tells you that he's a straight through broker or whatever he has, and he has so much liquidity to provide, 90% of the time, that broker is not giving your trade to anyone. So you've never made a trade. And in the first place, even if he passes over to a liquidity provider, you're literally not buying anything. That liquidity provider takes that trade and wait until you lose it or you make a profit and then pay you off. He is not going to the banks and buying any currency for you. He is literally not doing that. He's not converting, or he's not going to buy silver for you. That's not possible. So you are speculating on the price. Whichever guru tells you otherwise has no idea what he's saying. Literally. You have to run the opposite direction from him. So who knows where your orders are? When you put the trade on, what if you hadn't put the stop loss? Let's say you sold it somewhere here and you didn't put the stop loss there. Wouldn't this trade still go back up? You think you're the reason why your 1 pip or your 1 standard lot is why the market is going up there? The market would have still gone up there. We knew that. We knew that market was going to go up. If you look at my forecast and you see what I tell you, is that once we drop this much and they make this flat pattern in here, they're going to go back to retest this top. And after that, you're going to come down. Right? So what they're trying to convince you is you're losing because your broker is actually hunting your stop. No, your broker is not hunting your stop. You just are putting the stops the wrong place. You're entering the trade the wrong place and you're putting your stops the wrong place. The market is not moving because you put the trade on. So whoever is telling you that literally has no idea what they're saying. It's just BS. Retail traders, and that goes for like 99.9% of the retail traders in the market, we're speculators. We're speculating in the price. We're not participants of the market. So it doesn't matter what lot size you put on, what order you put on. It has no influence on what the market is going to do. And when you give that order to your broker, besides your broker, only you know there's an order to sell or to buy there to close that trade. It's just an order. Maybe 1,000 of you have orders sitting there, but that is only the broker knows that. And since the broker is not moving the market, there is nowhere he can move the market from the bottom to that top to take you out, or from the top to the bottom. But because the market moves in waves and the broker knows that, he knows you're going to make that mistake. He knows you're going to panic. He knows you're going to put a very tight stop. You're going to try to get this because you think this is going to break your some support or resistance or whatever. And it's going to come here, but then it's going to go back up, take you out because you get scared. You put a stop there and it's going to drop. And that's called wave analysis. So your broker knows that. He has the stats. 90% of the traders on his platform who do not understand how the way the market moves are losing. So he's just holding it and wait until you lose it. Literally, that's what he's doing, holding your trades weight. He's not even participating in the market. So he's not hunting your stop. Can he actually help you to get out of the trade with 1 or 2 pips away with a variable spread? Of course. If the market comes 3 pips away from where your stop is, and since your broker does have a variable spread, which you sign the contract, he can widen the spread a little. He can help you 2 or 3 pips, but that's the most he can do. 2 or 3 pips. Not more than that. He can't move the market from here to there. If he's really, really evil and there's a news event, he can make a very wide, a sharp, create a sharp spike that doesn't exist anywhere else except on his platform. Take out all the stops he has there. But only he's doing that, and that's not real. So anybody who tells you that anyone is hunting your stop has no idea what they're talking about. I'm going to take the challenge with them. Send them to me. Because there is nothing like stop hunting. No one is hunting your stop. If you trade with the idea that people are hunting your stop, then stop trading. Because you're literally looking at everything from the wrong angle. It's like going to the road and decide that all the cars are out there to hit you. So if you dare to try to cross the road, one of those cars are going to go to hit you. Not that we don't have car accidents, but no car is hunting anybody in the road. And nobody is hunting your stops, except for your broker who knows where it is. And he's not hunting it. He knows you're going to lose it because you're putting it the wrong place. Because you're entering the wrong place. Because you're looking at the chart in terms of some support and resistance or some moving average or whatever it is that you're using. And instead of looking at the chart at its structure and what it's doing. Again, let me show you this chart. This is structural behavior. What the chart does, how it behaves in terms of structure. If you want to understand more of how this works and how you can learn to do this the way we do it, you can join us. 5 live daily trading sessions we do. There's no other group that does that. 5 live daily trading sessions. My traders started in the Asian session. I joined them in a late Asian session. We do a London Open. We do a New York Open. We do them between London and New York. And then after New York, my traders are still in the room trading. So if you want to learn this stuff, join us. How? Check the description. My Skype is there. Send me a Skype message. And I'll give you all the details. And you will learn to trade. No one will be hunting your stops anymore. Hope this helps you. I'll be coming out with more videos telling you about all the myths in the market, all the BS that you're being told that is not true. Because surprisingly, a lot of traders, especially new traders, they have no idea what they're doing. For some reason, they believe they're participating in the market. And when they buy, somebody's out there hunting their stops. And when they don't put the stop, it goes straight to blowing up their account. Because they have no idea. If you're buying something if you're selling something when it's falling and you're buying when it is top, you're going to get yourself in trouble. Try to sell when it's at the top and buy when it's at the bottom. Here is the problem with that. How do you know where the top and bottom is? That's my next video. My next video will tell you why that statement is not so good, because you don't know where the top and bottoms are. And that's the problem. So have a good day. Trade with care. See all of you in the next video. Take care. Bye.